Peter, thanks very much for joining us. It would be good to get a sense from you on where you're seeing opportunities at the moment, particularly looking at the European markets.
Richard, many thanks for the question. So, frankly speaking, we see opportunities that's in almost every market in Europe we're active. And if we compare the numbers of the developments and standing assets, they're relatively quite similar, but we see difference in cycles. So, for example, UK is always in Europe a bit the fastest market. It was the fastest going down, and now we think it's the fastest going up. So we think UK is a bit back on the market, although there's, let's say, a lot of competition. We see a lot of development opportunities. Even core money is back. Financing market is there for speculative financing, and the occupier market is coming back. So in the crisis, a bit driven by the interest rate, which was, as we all know, the goal of, let's say, ECB and other central banks to cool down the economy. Now UK is, let's say, coming back, and you see it's coming down. This is a bit, let's say, different to, let's say, the other bigger European markets. On the other side of the development is a bit Spain, which still is a bit, let's say, suffering the high interest rate markets. We see a bit rising vacancies, even in the area of Barcelona, which was, let's say, in the previous years, I think the hotspot market, and was difficult to find plots. We still are confident that they're going up, but comparing to UK, as I said before, they're a bit slower than the UK. If we look, for example, to smaller markets, Czech Republic and Slovakia, where we're active, there's almost no vacancy. I think we're 1%, still 1%, so we have still a strong occupier market. We have a couple of banks. But for speculative logistics, you need, let's say, 50 to 70% pre-let, which means, let's say, it's a bit slower than speculative things. But especially what we are focusing is a bit in Czech Republic, area of Prague, and then the area of the border of Germany, where a lot of, let's say, manufacturing or light production areas are switching, let's say, across the border because labor costs are a bit lower. France, potentially after UK, is a second market which we see will recover maybe a bit quicker than the average in Europe. Especially there's a shift a bit from the main part coming from Paris to Marseille, a bit in the Atlantic area, where we see now, let's say, a couple of interesting opportunities. If we look at Germany, I think it's in the middle between Spain and UK. So especially on the investment and core capital market, we saw last year a heavy decline, which was visible in every European country. Even in Germany, occupiers' demand is slowing a bit down. Occupiers are a bit hesitating because there's some uncertainty when, let's say, interest rate will go down and economy will come a bit up. So the actual discussion in Germany are a bit slower than UK. We still see tenant demand, but it takes a bit longer in decision making than it took in the past. So therefore, we're still, let's say, positive. Logistics, let's say, will be there. Scarcity of land will be there. But in these, let's say, actual market, even especially compared to the UK, it's a bit slower than the fastest market. Italy, especially in and around Milan, is still a place to be. Internet penetration in Italy, it's still at in and around 5%. There's a long way to go to coming up. So there is a demand. Financing in Italy is possible. Tenant demand is a bit slowing down. It's not as difficult maybe as in Spain, especially in Milan, but it's not, has it bottom up? Might be, but you don't see, let's say, the curve going up, which in UK is the case. Netherlands is the hub. You have, let's say, 2 times more square meters of warehouses than inhabitants. So typically, let's say, all the goods coming from the US, I think, going to the Dutch or Belgian border. But we saw like a more heavy decrease in pricing for fresh produced things because of real estate transfer tax system in Netherlands, which you have to 10% real estate transfer tax after the first 6 months, always with the rush of the developers selling their goods. So all in all, we are positive. I think the biggest question in the market is when, let's say, interest rates will going down, when core capital will be back. And obviously, I mean, we're real estate people, so we can see the research trends. We're looking at the numbers. We're looking, let's say, at the figures coming from ECB or the British side. We're not quite sure whether let's say, interest rates will go down this year or before summer, after summer. And this will be the time when, as a core capital, will come back to the market. Positive thing for logistics is you don't have to sell, you can keep it. So there's still, let's say, a developer profit in the market. So as you might have seen, we did it last year when we refinanced 7 fresh completed assets, because due to the lack of core capital in 2023, we just don't want to sell for, let's say, core plus or value add prices, because that was the only capital on the market. But we are positive that maybe after summer, or let's say maybe next year, core capital will be back, and not quite sure whether the amount will be as we had seen in the boom years, but a normal core buyer will take a look at logistics, we are quite sure.
And so from your sense, Peter, does that mean that kind of you're looking at particularly now or moving forward as being, you know, a buying time, if you like, in terms of the market, when, you know, we're looking to see a pickup, core capital is coming back potentially into the market. So is that a buying signal for you in general into this market?
Logistics has the advantage that it's typically inflation hedged investment in liquid real estate. Lot sizes are smaller than potentially the big office things in the CBDs. So therefore, it does make sense to start buying now from our perspective. I think there will be opportunities around the years. I doubt that we will see a lot of distressed logistics sales, because as I said before, you just can keep it. We will see a rental growth, maybe not as massive as we've seen in the past, but we still think that it's at least in an amount of the inflation, maybe a bit above. So there are positive signs. So it's worth to buy.
Great. Good to see some kind of positive news back into the sector more generally, and particularly, I think those opportunities there in logistics. Thanks very much for joining us, Peter.
Thank you very much.